The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the November 12th wonderful Wednesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that each of you are off to a great start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary day. And, of course, we know the best way to do that is to realize that what's talked about is a dream. What's envisioned, well, that's darn right exciting. But what's planned, that becomes possible. More importantly, what's scheduled, well, what's scheduled becomes reality. And I want to thank you for your reality, for scheduling some time with me here this morning. I'm grateful for your presence, and I'm here to serve you. So give me a call at 877-927-6648. Internationally, you can do that at 727-445-1044. Remember, if you've got a question, somebody else has that exact same question. So don't do it for me. Don't do it for them. No, actually, don't do it for them. How about that? Slap me upside the face here. Don't do it for yourself. Do it for someone else. Random acts of kindness. That is really what it's all about. That is the way to live. It is Wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow is off 42 points, trading out at 17,573. S&P down 4, trading at 2035. Composite off 4 points, trading at 46.56. Russell 2000 off a point right now. The DAX off its session lows. She's only down 127 points right now. The FTSE off 11. Goldilocks is flat. She's up 80 cents, trading at 11.63. Silver off 4 pennies, trading at 15.64. Light sweet crude off 46 cents. She's trading at 77 to 48. Our caller number again, 877-927-6648. Leading the charge, the upside, it is a Fossil Group. FOSL is the ticker symbol, up 7.5%, up $7 and change. Agios Pharmaceuticals up 7%, up $5.50. Matson Company up 5.25%, up 18%. Time Warner Cable up about $3.80. GoPro up $3. Allergan up $2.60. Charter Communications up a couple of bucks out there. Rockwell Automation up $1.56. To the downside, Altisource portfolio off 13%, down $9 and change. Intercept Pharmaceuticals off $6. Priceline down $3, no big deal. Smuckers and Company off $4, down 3.5 or 3.8%. Clovis Oncology off about 5%, down $2.90. What else? Goldman Sachs off about $2, down 1%. Okay, so where are we at? What's going on inside the markets? I didn't get a chance to finish what it is we want to look for, includes inside the markets here. So I'm going to go and take a look at the 30-minute chart here for the NASDAQ with you. Now, when I take a look, I'm going to do this couple things here first. Let me do this first. The NASDAQ has been traveling sideways. Let me see if this really emulates the point. No, that doesn't emulate the point either. Let me come back. I'll still come back to the 30-minute chart here for the NASDAQ. So what do we want to take a look at? Now, the NASDAQ, this is a 30-minute chart that we're looking at. And if I'm going to pull this back, and you're going to see a lot of stuff on the screen out here. But basically, what I'm doing is just coming back into the lows here from October the 16th. And it's been, nice move up until October 31st when the NASDAQ started to trade sideways. Okay, let me scrunch this down just a bit. What I really wanted to get at is we take a look at moves to the downside out here inside of the NASDAQ. This morning here, as the NASDAQ was coming into, this was into the time period of 9 o'clock exactly, what the NASDAQ was doing, if you were taking a look at, if you were a wave counter out there, and you should be, what the NASDAQ had done on the 30-minute chart was it got down to that seventh wave. That is oftentimes where you see a reversal. That was a low that came in at 8:30 this morning. Inside of the NASDAQ, that got down to 41.6650. That very next session, the actual low was 41.67. Out there, we saw price move into a moving average that is held as support really ever since the NASDAQ, this on the 30-minute chart, ever since the NASDAQ came out of the lows from October the 17th. That level actually price never got down to that level here. This morning got close to it, and now what we are seeing here is a bounce. Now, So that was a buying opportunity. If we see that low get taken out, that's really the point that I want to make out here. A lot of time left in the trading session. Remember, this is going to be a sideways, consolidating type market that's going to frustrate everyone. Many folks would have woke up this morning. The bears would have woke up, those that are short, and were like licking their chops. And for me, I was saying, hey, not so fast. I pointed out, even though I am looking for the market to pull back, there's different hurdles that the market has to now prove itself to get through in order to prove that that really is the case. Well, this is one of the hurdles that has not gotten through there. So what does that mean? That means right now what you're going to be watching for during the day today, you're going to be watching for to see if the market moves lower. You're going to see the market, you're going to see what happens when the market gets down to, if in fact it does, 41.6650. I'm not saying it is. I'm just saying that is what you want to be paying attention to out there. 41.6650, 41.66, right around that level. You break that says, okay, we're going to a lower price. We may not get there out there. We may not today. Are we going to? Yeah, the answer is yes. We are going to see the market give us some type of pullback between now and next Friday out there. If we take a look at what's going on inside. So that was one of the things. So we talked about the euro, Japanese yen. We noticed how that had formed a Gartley buy pattern out there. If that pattern fails, price will move down to the next level. At this stage, euro yen hasn't really done much since in the last 5 minutes, last 10 minutes out here. But we want to keep an eye on that currency pair because of how it tracks the U.S. stock market. All right, we've covered the 30-minute chart for the NQ out here, which has really been the strong link. And so we now have a price point that we want to pay attention to. You start to see that crack, that will be sending off an important message to us. What else is going on in the market still as we speak right now? Well, if we take a look at the New York Stock Exchange, why the New York Stock Exchange, the wider swath of the market, it was the one that gave us the best signals as the market was forming a bottom out there, as the market was cascading lower. The New York Stock Exchange was saying not so fast. Turned out that was a true statement. That's exactly what we have going on right now. You've got net declining issues, not huge. It would take about 2,200, 2,300, somewhere in that range today in order to push the price oscillator down below zero. You get below zero. Then you start to take a look at potentially more serious price action to the downside inside the New York Stock Exchange. What we know is that you have been making higher highs. You've been doing it with less strength out there. Not the type of RSI strength, less internal strength, less momentum strength that says that it is tired out here. That is on the NYSE. That says it has more work to do to the downside. That's what's going on in that chart. The same thing here with regard to the Nasdaq Composite. Now, this is the composite. This is a daily chart, just moving sideways off of its lows out here. Let me pull this back a little bit further. But the Nasdaq is saying it's also, even though the 30-minute chart gave a great intraday buy signal. Absolutely great, fantastic intraday buy signal. What it's doing as we speak right now, you can see that its price oscillator is moving lower. So even though it's off its session lows, its price oscillator is moving lower. That is never a good scene out here. Whether you're consolidating sideways, whether you're moving higher out here, and it's just moved kind of slightly higher ever since the trading session of October 31st out there. That is an indication of an impending, not the type of reversal. This is not where this is the end of the market. This is the top, like so many out there are forecasting. I get all kinds of different emails from folks, and I'm always just kind of like, what are you guys looking at? Of course, they're saying to me, hey, Rhodes, what are you looking at? Well, I share with you what it is that I'm looking at with regard to the patterns out here. And this pattern that I'm sharing with you says we're going to see some fall from this level. I can't tell you when, but what we can do is we can identify patterns like we did today. That was the first it was the first 7-wave count to the downside in the NQ since coming on the 30-minute chart, since coming off of the lows from October the 16th out here. Now, if we take a look at the Dow, which has really been the strong hands out here as well, it too has a declining tops price oscillator out there. And those have always led to some type of retracement. I expect we're going to see the type of retracement, nothing substantial. If you can catch it right, it could be enough to make a little bit of short-term money out here. But it could be the kind of move that we saw back here around March the 7th, 2014. That's when we saw the Dow go from about 16,505 down to a low of about 16,046, about a 500-point move out there. Now, this move could be more than 500 points. Why could it be more than 500 points? Well, if we just simply go from the low inside of the Dow from October the 15th all the way to the high. Yesterday's doji candle out there says the market is tired. At this stage, the leaves are falling from the tree. I said, what, 16,505, well, a 500-point move. Well, 500-point move off of the Dow takes you to about 17,1. Actually, not too far away from what I would project. 16,968, your dead cat bounce, your 0.382 retracement. But trust me, you start to see a 500-point move in the Dow, people are going to think it's over. It's not over. It's just the beginning. It's just the beginning of the next move to the upside that we will see take place inside of the market, like all of the Santa Claus rallies out there. So that's what's going on the broader spectrum of the charts out here and what to be paying attention to. The other thing, another item that we'll certainly pay attention to is going to be that VIX index. She's off its session highs. Of course, you know that we pay attention to that 50-day exponential moving average on it. 1535 is the number out there. You're trading at 1322 as we speak. If you do see the VIX get above 1535, that would be a heck of a move out there. If we do see that occur at any point in time here between now and next Friday, we're in store for a deeper correction, maybe more than just that dead cat bounce, more than that 0.382 retracement level. So that's how you put those pieces of the puzzle together. That's all that the market is. It's just a bunch of feminine energy, and I don't mean that gender specific. I mean that in the best way. The market is always testing you, and that's what feminine energy is supposed to do. And so we just have to step up and put our arms around it and hug the market and thank it for all that information, and then be ready to take action when it is appropriate. Talk about taking action out here. Let's go take a look at what's moving in the markets. Let's go see what we have today. As I mentioned, Altisource portfolio, that's moving to the downside, down about 10% out here. What else do we have moving that maybe folks typically follow that's got any kind of movement to the upside or to the downside? Let's go take a look at that price line. No big deal out there. Intercept Pharmaceuticals, not really a big deal. I guess Canadian Solar, CSIQ. Was Canadian Solar up this morning? Is that possible? Let me see. What's Canadian Solar? It's a 30-minute chart. Yeah, it was up this morning, I think. I think that was on the leaders on the upside. To the upside. Yeah, so this thing, Canadian Solar, has sold off. So they generated revenue of $914 million versus $490. So that's a pretty nice 100% increase of revenues out there, close to 100%, not exactly, maybe 80% out there, not too shabby. Man, net income, triple. $108 million versus $33 million out there. If you were the CEO, CFO of that company, you'd be like all over those kind of numbers out there, right? Wow. So this thing has sold off. So let's go take a look at that Canadian Solar, CSIQ. Opened up this morning here at a price point of $32.64. You're trading at $29.49 as we speak right now. Let me pull this back just a bit further, see what Canadian Solar has in store for us out here, just looking. So it's got this little sign of strength. So CSIQ, Canadian Solar. Let me clean up this chart out here. Give me uno momento, por favor, to do that. We're going to get rid of that. We're going to get rid of, I'll go ahead and leave that there and get rid of those things. Okay, so now we've got a clean chart. Now, Canadian Solar, it's like a dramatic pause out there. How does that work? This is Steve Rhodes. This is TFNN. When we get back from this break, we're going to go take a look at Canadian Solar, CSIQ. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before we went to break, we were taking a look at Canadian Solar. That's off of its session highs out there, just creaming the numbers out here. Now, if we take a look at Canadian Solar, this thing had a nice breakout session on August the 13th, 19 million shares to the upside. Now, remember, when we take a look, so it did actually come back and close that gap out here. So, in essence, that level, by closing that gap, by coming back to its sign of strength, that no longer 26.65, it's just no longer really a support area. But we revert back to other levels of support. Let's take a look at what Canadian Solar did as it came back into this level. Remember, I've always suggested that when you take a look at a breakout session, that you come back to a couple of candles or so and find the lightest volume session, and that really becomes your support level out here. Well, in the case of Canadian Solar, if you just followed just that simple rule out here, and it's a great rule, if we take a look at it, you'd be looking at the trading session here from August the 8th. That's at 25.02. Now, the volume there was 1.8 million shares. Oftentimes, you're not going to get volume coming back into that level with the light volume. You're still using it as a benchmark, the 19 million shares. You're going to look for some type of reversal signal, and you want to understand that there's about 30 or so different Japanese candlesticks out there, and half of those are really basically useless, and it's just simply noise. They would just clutter your head, and so you want to really learn how to use these signals. If you're looking to understand how the market is communicating to you, then please make a Japanese candlestick charting a must, and make sure that you do it when you're making it a must, that you get the right resources to be able to do that. And if you do that, it'll unlock your trade. It doesn't matter what patterns it is that you trade out there. It works for every single pattern out there. It'll help you to exit the trade. Remember, this is not about selling the exact top or buying the exact bottom out here. This is about being able to enjoy that big old burger, those big old steaks out there. And so no matter what patterns it is that you might trade, whether you're using Bollinger Bands, whether you're using A to B equals CD, whether you're using the Chapman Wave, whether you're using price relative strength divergent pattern, whatever it is that whether you're using volume at swing points, you're looking for messages out here. The market is designed. The bulls and bears have to show up for work each and every day. So make that a must to make sure. And what I have done, I've spent thousands of hours, literally thousands of hours, perfecting that. So in fact, the next Saturday, November 22nd, or whichever Saturday it is, I'm going to be sharing with folks in a workshop. I'm doing a 7-week workshop out there. I have not done that before. It's going to be a 3-hour session on Saturday, November 22nd from 9 to 12. Of course, that'll be archived. You'll have access to that. 6 weeks worth of follow-up, hand-holding, mentoring, coaching, the whole 9 yards out there. So this is not, this is to make sure that you actually get it and to be able to answer your questions and to be able to assist you. So I'm going to help you folk. One of the areas is going to be on the Japanese candlesticks and which ones you need to trade, and understanding the power and the strength, and really condensing what you could spend thousands of hours figuring out. And I'm going to condense it within that 3-hour session out there. So just teaching you what you need to know. I'm going to be giving you the real male version of the signals inside of the market. Now, inside the Canadian Solar, it pulls back with light volume. Does give you a nice little bullish engulfing candle at that support level. Now, volume-wise, it was pulling back with lighter volume. In fact, if I go over to the weekly chart out here, you'll see also on the weekly chart, price was pulling back into the weekly candle session, which was from August the 11th with 44 million shares, and price had pulled back there with 25 million shares. So what is price doing today off of its session highs? You know, good question. I don't know. Where should Canadian Solar find some support out here? Well, it should find some support somewhere between the 2502, 2665 area. No high volume high or anything like that to get us all excited. It looks more like it is consolidating more than it is anything else out here. And if we take a look at where price had stopped in its tracks out here at the highs, it was very close to this downdraft session, this little volume off the highs back here in March of 2014. That was 16 million shares to the downside, and as price was getting up into that area on September the 8th, it was doing with only about 5 million shares. So it looks really more like a consolidation between about $25 to the 40-ish range out there. So if you're into solar stocks out here, wait for this to pull back to 2502. And make sure that it's doing it with lighter volume than the last time that it got down there. So now use your October 15th swing point as your benchmark. That's 6.2 million shares. That was on CSIQ. We get back from this breakout here. Let's go take a look at gold, Goldilocks, silver. Let's take a look at some of the equities out there. I see they're in the green today. Gold's up $2. The U.S. dollar index, she's now pulled back just a hair out here. So go take a look at that. Of course, you know, Stevie believes there's a major significant bottom that is forming in the metals marketplace. The question is, was it a few days ago? This is Steve Rhodes, and TFNN will be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 50, S&P is down 5. It was the Swede, I don't remember his first name, Jacobson is the guy's last name, playing the World Series of Poker for $10 million is the final prize. And what does he get? He gets a pair of tens and flops a set. And what a beautiful thing. How does that work out there? 10 million, and he gets a set of 10s in order to go ahead and take the tournament. Not too bad for second place out there. I think the guy gets about $5.5 million, but no bracelet though. No piece of gold out there. All right. So I said we would take a look at Goldilocks. Let's go take a look at that. So you got the U.S. dollar index back just a hair right now. Let's check in on the first. Let's check in on the currencies. See what's going on inside the euro out here. So it's up 18 pennies, 18 pips out here. It's really not a big move yet inside of the euro. Nonetheless, pretty impressive over the last couple days. What's really been going on inside of the mining equities out here. So if we go take a look, that's got one of my favorite patterns. We'll be sharing that and how to exactly trade that during the workshop on November the 22nd. Let's take a look at the mining equities right now. Here is if you're watching us on Tiger TV, I've got a list of about 40 mining equities out here. We can see that virtually all of them are in the green. A couple are flat. Some are down. Maybe First Majestic Silver, that's off about 8 pennies. Yamana Gold, that's off 1 penny. No big deal. You've got Nova Gold NG, that's down 3 cents at 285. Not a big deal out there. Otherwise, everything is to the upside. Now, let's take a look at percentage-wise who's leading the charge to the upside out here. Look, Great Panther Silver is up 8%. Let's go check out Great Panther Silver, see what it is doing. GPL is the ticker symbol. So you got 60,000 shares behind the move here. Now, Great Panther has just been consolidating out at the low. She's come back and she has tested. Of course, I use the word she, could be he. But Great Panther has come back and tested the December 4th low. That was with 66 cents out there. Volume of 212,000 shares, and that was tested with 880,000 shares. It was tested with a bit too much volume. So this is still consolidating at its lows. Up 8 cents or so today, up at 74 cents. But really, what this equity needs to do here, just consolidating lows, what it really needs to do is get above the market profile high. I would say the 86 cent level would be start to turn this thing into a bullish looking equity. So 86 cents, you're at 77 cents as we speak right now. That's the leader percentage wise in the clubhouse. Looks like Rubicon RBY is up about 7%. Now this stock chart here, this looks pretty good. Now, what this was doing, let's put this on a weekly chart out here. Well, first, let's put it on the weekly chart and see what it was doing out here as it was making its lows. Okay, so we got the weekly chart. So Rubicon has been a little bit stronger than some of the other mining equities out here. Now, what do I mean by that? Well, one, it just came back and it tested the swing point from December. This is the weekly chart. Rubicon had 5.2 million shares back there. Now, price came back with It pulled back with volume, 7.2 million shares, and closed inside that. That was an indication that, hey, it may make a run for the lows out there, those lows being 65 cents, pulling back with volume. But again, yesterday I gave you, and the day before I think I gave you my thesis here that it was really it was those funds that have a October year end that were helping to really puke up the market by really getting rid of those stocks inside their portfolio. They did not want those portfolios going out to their clients who were going to take a look at the year end and say, why do I have any of these things in my portfolio? They just simply were beaten down. So I think I do believe there was a lot of that was going on October 30th and October 31st out there. That does not mean that I am mistreating or not paying attention to the volume patterns. I am. But in the case of Rubicon, it came down with volume. Now, what did it do the following week on November 3rd? Again, still more volume, 7.4 million shares into 5.2. But it did reject that level. So it rejected that level. And right now it's trading out at $1.06. So in the case of Rubicon, it has got some any volume at the highs out here. No, not on the weekly chart. Let's flip back to the daily. And now, look, as long as Rubicon stays above 87 cents, that's if it gets below 87 cents, it increases the likelihood that it could move all the way back down to the lows out there. Again, that was about 65 cents, I believe. Now, if we take a look at it on the daily chart, see what it's doing out here. Trading-wise, it's moving into the session from October 29th. That's got 1.3 million shares. You're 265 in 1 hour of trading, 265 times 6. Just from a rounding standpoint, you're about the same type of volume. So, hey, that's not too shabby out here inside of Rubicon. Anything else that that would concern us here? No. And on the daily chart, it's above its market profile resistance level. Now, if we take a look at Rubicon, let's see how often has it done that since the highs out here back in July of 2014. How often have we seen a trade above a market profile high? Okay, and the answer is we have not. Not until today. So that should say somebody should say, something to think about. So if we utilize market profiles, and in fact, if we take a look at the current market profile that's out there, take notice of the mere fact that the point of control level, that light blue line, is closer to the resistance zone. That should say that sellers have the upper hand. And when sellers lose that upper hand, boy, there's nothing more bullish than a bearish pattern that fails out here. Now, the key for Rubicon is closing above 99 cents today. But what we can see here as we take a look at this pattern, if we take a look at the wonderful TAS market profiles brought to us by John Logan and his group out there, and that is a beautiful thing, that we have not seen a close above that since the July 22nd high that was put out there, that was formed out there. So that is a positive, and I would say Rubicon may be worth tinkering. Now, let's take a look at, so you got Great Panther, we got Rubicon, anything else that shows up here? Yeah, you got Allied Nevada, ANV. I think that thing has been just totally crushed. See if there's anything positive here. Now, Allied Nevada is one that, let's put this on a weekly chart as well. ANV, let's go see what it was doing out here. Still not above its on a daily basis market profile. Now, this thing has, just been trashed. I mean, you would talk about trash. October of 2012 was trading out at $41 out here. You're trading at the $1.21 as we speak right now. Nothing to really benchmark this thing back against other than coming all the way back into, well, you can't even do that. I mean, I'm back at 2008. You're below the 2008 level out here. So you got a lot of folks that are basically not in the money inside of Allied Nevada. So that's what the weekly chart. So the weekly chart says basically not a whole lot there for us to focus on. Instead, we got to switch over to the daily chart out here. So it's up nicely this morning. Of course, it doesn't take much in order to get up 7% on a $1.21 stock out here. It's got resistance at $1.24. So at this stage here, you'd have to say Allied Nevada, maybe not the best. No real sign of strength on a daily basis out here. So no sign of strength yet. I'd have to say Allied Nevada, one of those stocks you just kind of put off into the shelf because out of the 40 or so that are out here, there are many better looking equities. Let's just finish this off here. We don't want to make this the gold show or anything, but let's go take a look at the GDX out here. GDX, let's do the same thing that we did with regard to Rubicon. Let me get rid of the retracement out here. So we take a look at the GDX. Let me pull this back just a tad. And we look at the coming off of the high from August 15, 2014. And we use our market profile resistance zone, the red horizontal lines going across your screen out here. We saw on the trading session of August 29th, the one close above it, then back below it. And since that period of time, we have not seen price inside the GDX get above that level. Not until right this very moment. Now, we're just slightly above that area. But what's the number that you want to be paying attention to today? I would say it's 1842. You're trading at 1854. If you get it above 1842 out there. Now, it did slightly get above it once recently here, November the 7th, so 4 trading sessions ago, and then you closed right back below it. You went back below it, you went all the way down to the bottom. So that would say to me, today if you see it close above 18, what was that number again, 1842 out there, then what you'd really like to see is it get into that November 7th area with volume. Now, that's got 136 million shares. It is not anywhere near that volume here today inside of the GDX. Closing above it on light volume, okay, but you'd like to really see it take it on with volume. And that was a sign of strength, though. That certainly was a sign of strength. That's a daily chart that we're taking a look at. And in essence, is really the B point of an A to B equals C to the upside inside of the GDX. So 1842 is the number. If we see tomorrow, here's what I would say from a trade standpoint. You close above 1842 today. No idea if you will. But if you did, and you come back tomorrow and you get back inside the 1842 level, inside the box, you'd say, probably moves down to 1727. 1727 would be the level where you'd go ahead and place your limit order somewhere right around 1727. It actually got down to 1731 on November 10th. So don't use 1727. Use something just a little bit north of that on a trade. Likewise, it could take off to the upside out here. Of course, it's only going to do that, really do it, with momentum, with conviction behind that move as soon as we see that U.S. dollar index move lower out here. And right now, it's just down about 14 cents out there. We're going to really need to see that euro take off to the top side out there. So that is covering gold. We think really covers silver. I think that covered. Well, we looked at a silver equity, I believe. Anyways, that covers that general market out here. The DAX looks like she's back towards her session lows out here, off 157. Yeah, the DAX is. So if we take a look at what's going on over in Germany as we speak, if we take a look at retracements out here, and the DAX is not as strong as the U.S. markets. That is for sure. The DAX is not even as strong as the Russell 2000. If we take a look at the DAX, she made more than a 0.618 retracement. That was off of the lows out here. Right now, the world markets in essence are really doing the same thing, right? Since October 31st out here, they've basically been moving sideways in this frustrating consolidation zone out here. And I expect that it's going to continue. What I really expect is we're going to see some kind of drop. I hope that for you, that's what we see. I hope that we see some kind of drop. The scarier, the better. It may not be that scary, but that's what I hope that we see out there, because that's what you want. That becomes your next buy inside of the marketplace out here. Right now, the buy-in is only short-term trading, in my opinion, because we've just got more time to go until we get to next Friday. But each day that clicks by, it bodes better and better for the bulls out there. That's what's going on inside of the DAX. If we take a look at couple stocks here that are moving. Let's look at to the upside. Let's see here. You got Chipotle is up about 0.7%, $5. No big deal out there. Agios Pharmaceuticals, that's up. So let's take a look at Caesars Entertainment. CZR is the ticker symbol. Let's take a look at what Caesars Entertainment has done. Now, this stock here has been trashed as well, off of its highs from back in September 2013 in the $26 range. You're at $13 right now, so you're cut in half back there. But what Caesars Entertainment has done, we talked about coming back to a sign of strength out here. If we take, I'll blow this up on my screen, then we'll take a look at the lines out here. Now, Caesars Entertainment, huge sign of strength all the way back in February of 2013. So as we take a look at that sign of strength out here, that takes us back into the trading session right here. Well, we'll draw a couple of different lines out here. Remember, going back to the lowest volume session prior to that sign of strength, in this case was February 6th. That had 381,000 shares. It's at about 820. Now, remember, you got signs of strength really taking place. The breakout beginning February 7th, and, of course, follow through on February 8th. And big volume there, 9.4 million shares. So we know it's in that 820 to the 820 to the 836 type range out there. And again, big volume, 9 million shares. Let's fast forward to what did Caesars Entertainment do? Well, it came all the way back down to that level on October 14th out here. As the markets were making their lows out here, Caesars Entertainment pulls back to 851, does with 2.5 million shares. So it pulled all the way back to that sign of strength inside of the marketplace. Then what we have seen out here is we saw a little sign of strength off of that bottom, off of that low. That took place on October 17th. Now you're seeing some follow-through to the upside out here, and it is completing its formula. Its first A to B equals CD to the upside in quite some time. That A point being the low on October 14th. The B point being the high out here on October 21st, October 22nd. The C point being yesterday. 1-to-1 is where this is headed to, which is 1452. Good volume behind the move, 1.8 million shares. Caesars Entertainment is on its way to that little doji in the window, that little swing point from September 22nd, again in the 1452 level. Let's go out to New York to Maria. Maria, thanks for calling. Thanks for holding. How are you this morning? Up. Looks like Maria may have dropped. She wanted to take a look at the NQ, but I don't know what her what her question was and the time frame that she was taking a look at. Maybe she'll get a chance to call back in. So Caesars Entertainment coming right back into a breakout area and now seeing a couple of signs of strength off of the bottom there. CZR is the ticker symbol. Go check that out with regard to coming back into a breakout area. Let's look at Matson, MATX. What is behind this move out here? Matson Inc. is rising following an acquisition. Okay, so it's an acquisition that's going on out there. That's why it's got an 18% move. No reason for me to hang out and spend a lot of time there. We get back from this break here. I'll go surf around. I'll see if there's something worth noting. 877-927-6648. Dow's off 44. S&P down 5. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live
live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off about 52 points, S&P down 6. Let me see if I can use some mental telepathy here and figure out what Maria might have been calling for about the NASDAQ, about the NQ out here. Actually, I don't know, but so why don't I just do a full review, and maybe I'll be able to cover that both for her and for you. So let's start off by taking a look at the daily chart here for the NASDAQ. So what do we know about the NQ right now? Number one, nice little rising price channel that is in place here. Now, the rising price channel, those are the blue diagonal lines from lower left, upper right, going across my screen out here. Pretty well set along the top side of this. Maybe can slide it down just a tad out there. We've got enough connections here that tell us that the upper side of the price channel is in place. The lower side, I don't really have only one real connection, and that is the little bottom of the trading session from October the 17th. No better place for me to place that than right there. Now, what we can see here is prices just kind of gradually move sideways. So price is now starting to move into the bottom of that rising price channel. Excuse me. Now, nothing, breaking a trend line and a channel line by moving sideways is never. That's never gotten my attention out there, and that's what we have going on right now. We also have, though, inside the NASDAQ has been this sideways consolidation move ever since October 31st. So that sideways move out here, and it's done that. It's gotten up to a fifth wave as of yesterday. Maybe that continues today if it moves higher. It's up against resistance. Its TAS market profile right around the 41.75 or 41.76. Everything about the way that this consolidation is unfolding out here suggests to me that we are seeing a short-term top that is put in place. Real key level for support inside the NQ. First level is going to be the 41.42 and then 4,026 area. Breaking the channel line out here, the rising channel line, that'll also give us a piece of information. That's the daily chart for the NQ. If we take a look at the 5-hour energy drink chart here for the NQ, we're going to find that it's in the 6th of 7th waves out here, that it's got really good support at about 41.36 to 41.41 out here. Again, just a sideways consolidation, choppy move out here. Nothing really bullish about it. It says to me that the NQ is tired. That's what the 5-hour chart shows. If we take a look at the 120-minute time frame chart out here for the NQ, what is this telling us? This is telling us here that what price did this morning, right, on the 30-minute chart, we saw that it was making that the 7th wave down, coming into a level of support, a little bit different level on the 120-minute, but it gives us really about the same price level, around 41.67. We can see how that price held as support. Now, we have not seen, on a 30-minute chart here, we have not seen 7 waves to the downside up until this morning here at 9 o'clock. So that tells us something out here, that it's losing its strength as well. If we take a look at what price actually did on the 120-minute chart, when it got up to the 41.83, it was running right into resistance of its market profile out there. So that so far has been the high. Again, the key here is going to be, in my opinion, is going to be the low at that 9 o'clock session. In this case here, it's also the 10 o'clock candle. And that low is right around the 41.66 mark. Instead of giving you the right around, let me tell you, 41.66.50. I'd use 41.60. I'd use the 41.64. On the 120-minute chart, a break of that area, close below that, that says, okay, that correction time is in place. And everything that I'm looking at says correction time, retracement time, moving down here for a few days is really in place. So we'll see if the sellers, I won't even call them the bears, we'll see if the sellers can muster up the strength to move the markets down. But that's how I would be taking a look at it. That's how I'd be trading it. And only if that VIX index gets above the 50-day exponential moving average is there going to be a deeper retracement. If it did that today, you'd have a move greater than 10%, and that means you see a bounce within 2 days. Folks, thanks so much for joining us here at TFNN. As always, stay tuned because it's a great lineup. We got our man Basil Chapman, Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show. Get over to the homepage at TFNN.com. Join me for 7 weeks. It'll be an educational experience like you've never had. Take care, folks. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.